Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance. So buckle up, because today we're diving into an amended report that's a little bit of a do-over. We're looking at Sterling Real Estate Trust, or as they now do business, Sterling Multifamily Trust. Now, this isn't a brand new report. It's actually an amendment to a previous report, meaning they already filed some information and now they're correcting it. And why are they correcting it, you ask? Well, for a pretty simple reason. They just misspelled their own name on the cover of the original report. So this is an 8K filing, and specifically it's an amendment. Think of it like sending a letter, realizing you made a typo after mailing it, so you send a correction. This particular filing is about a direct financial obligation. Essentially, the company took out a loan or made a loan. The main event here happened on June 25th. Now, they filed the original report about this on June 30th, and then they filed an amendment to fix an interest rate issue, and now they're filing another amendment to fix that typo on the cover. It's like a game of corporate telephone, but with official documents. So what's the story behind this loan? Well, it seems Sterling Real Estate Trust, through its operating partnership Sterling Properties LLP, is acting as the lender, and Sterling Office and Industrial Properties LLLP is the borrower. They've entered into a revolving promissory note, which essentially means it's a line of credit like a credit card for businesses. The borrower can draw funds up to a certain limit and pay interest on what they use. The total amount, the maximum they can borrow, is $10 million. That's a pretty significant sum, showing a substantial financial transaction. Now let's talk about the cost of this money. The interest rate is 6.75%. This is the price the borrower pays for using the money. It's important for any business to manage its borrowing costs effectively, and this rate will be a key factor in the borrower's profitability. What's really interesting here is the guarantee. The company Sterling Real Estate Trust is guaranteeing this loan. This means if the borrower can't pay it back, Sterling Real Estate Trust is on the hook. This is a big deal. It shows the parent company is directly backing this financial obligation, which can be a sign of financial strength, but also carries inherent risk if things go south. Now, looking at the exhibits, it seems they've included the actual promissory note and loan agreement, which is where all the nitty-gritty details are. This is where you'd find the exact terms and conditions of the loan. So what does this all mean? Essentially, Sterling Real Estate Trust is providing a significant line of credit to another entity within its broader business structure. This is a common practice for larger companies to manage their capital and operations effectively. It allows different parts of the business to access funds when needed, backed by the resources of the main company. The fact that it's a revolving note means the borrower can repay and then borrow again, offering flexibility. It allows different parts of the business to access funds when needed, backed by the resources of the main company. The fact that it's a revolving note means the borrower can refi, equity, and borrow, again offering flexibility. The other exhibit, the interactive data file, that's for electronic filing so that computers can read and process the information. Think of it as making the report machine readable. This whole filing is a formality to ensure that the public is aware of these significant financial commitments. Transparency in these matters is crucial for investors and the market to understand the company's financial health and its obligations. And the report is signed off by Megan E. Schreiner, who holds the titles of President, CFO, and Treasurer. That's a lot of hats to wear, which can either mean a very efficient organization or a company that's stretched a bit thin. Now, looking at the bigger picture for Sterling Real Estate Trust, this loan is a piece of their financial puzzle. Without seeing their overall financial statements, it's hard to say if $10 million is a big deal for them. But the guarantee is key. It means they're putting some of their own reputation and financial stability on the line. If Sterling Office and Industrial Properties LLP thrives, this loan will likely be a smooth operation. However, if the borrower struggles, Sterling Real Estate Trust will have to step in and cover the debt, which could impact their own profitability and financial standing. So what's my take on this? It's a standard financial transaction, but the guarantee makes it noteworthy. It highlights the interconnectedness of their business entities. The 6.75% interest rate seems reasonable in the current economic climate, but it's the borrower's ability to manage that debt that will truly tell the tale. The repeated amendments to fix simple errors like a misspelled name do raise a slight eyebrow regarding attention to detail, but it's not an immediate red flag. They're correcting their mistakes, which is important. They're also making sure information is public and correct, which is what we want from public companies. What's your take on these transactions and the implications of that guarantee? Let me know in the comments below. If you found this breakdown helpful and want to stay informed about what's really going on behind these corporate filings, make sure to hit that like button and subscribe. We've also got a fantastic community over on our Discord server, linked in the description, where we break down even more of these filings. Thanks for watching, and I'll see you in the next one.